What if I can't refi? What if rates are at a level? What am I going to do? What's my plan B? Some of my ideas that I wanted to hear from you guys before I put them out. I think there's going to be some refi stuff that's going to be interesting. There's going to be more product on the market because some people are going to sell. And so again, I don't think values are going to skyrocket because I think there's supply and demand. You're going to have high interest rates and more stuff on the market. I think values will go down, which is good to buy, not good to sell. I already brought up we can buy a portion of facility. Prices aren't going back up. Cash flow is way more important. I think we need to think beyond the 5-year call. What if I can't refi? Will it still cash flow? What's plan B? I think a lot of us over the last 3 or 4 years have run the numbers only on what happens up to that date when there's the 5-year call. I think it's good. It's probably good then, but it's certainly good now to think beyond the call. What if I can't refi? What if rates are at a level? What am I going to do? What's my plan B? And be comfortable with it. I personally think interest rates, they're going to dip down a little bit, but I think they're going to go up, maybe even a little more. And I think we're going to have a rise in taxes. And the main things they're looking at are Social Security. They're looking at long-term capital gains, and they're looking at stepped-up base. They can't really raise taxes on the middle class anymore. There's just not a lot of money left there. So what they're going to go to other ways where they tax the rich, and that's going to be the stepped-up basis. I think it's going to be, again, long-term capital gains. Get away with 15% on long-term capital gains. Think about that. If you have some equity and you need to sell, it might be that in a certain number of years, you'll be paying conceivably 10% more taxes on that gain. If you don't 1031 or whatever, I think 1031 should be on the table. That's all the stuff they can go to. They can't really raise taxes on the middle class much more, and then middle class is where the money is. And then they're going to go after the 1%. But anyway, that's all the ideas that I'm sharing from the stage on my crystal ball. But again, the whole point of this talk is to encourage us to talk over the next 2 days. I don't pretend to have all the answers, but I think it's good for us to think about these things and discuss these things and put them into your long-term vision and your plan for your business.